Thanks for stopping by, everyone. My name is Jeff, and this is the 3 stocks to buy video for August 2019. Guys, we have really got some awesome opportunities to buy into some really good stocks. And one of these stocks we are going to talk about tonight was on a big earnings miss. We are going to get into that in just a minute. I do want to make you aware we have another huge week of earnings ahead of us. And of course, by the time I publish this video, I'm sure some of these companies on Monday will have already reported, like Beyond Meat. I know a lot of people very interested in what Beyond Meat is going to bring to the table. My personal opinion on that, guys, I think the stock is going to run whether the numbers are good or bad. You might see a short-term decline if the earnings report does not impress. But I'm really expecting fireworks either way out of that earnings report. And a couple other companies I'm going to be watching on Monday: Illumina, Chegg, and NXP Semiconductors, okay? Tuesday, we got MasterCard, Altria, Sony, that's another company I've been a long-term shareholder in, Under Armour, and then after close, guys, those two companies right up there on top, AMD and Apple. I've been investing in AMD since 2016. I've been investing in Apple since 2013. Very excited about both. I know the earnings whisper is that Apple is going to report a decline. I never count Apple out. And then throughout the rest of the week, guys, I'm going to be watching Twilio on Wednesday, Lam Research, Western Digital, and then Thursday, I'm really excited because I'm a long-term shareholder in Shopify and Square and Verizon Wireless, which Verizon Wireless usually never moves that much on earnings, but Shopify and Square, those have some explosive capabilities. Probably good to be holding calls on them. You know what to do, guys. Make sure to drop a thumbs up on this video. I appreciate all the support. And make sure to subscribe to the channel if you have not done so already. So the first stock we're going to talk about tonight, guys, is Align Technology, ticker symbol ALGN. And as you can see, guys, just quickly from this chart pattern, it does not look like this stock is heading in the right direction. And this is the 1 month chart, okay? So mid last week, Align was trading around $275 a share right before their earnings report. And then, of course, the stock tanked hard, trading itself down to $200. Now is currently trading at $196. Now, in September of 2018, guys, this was almost a $400 per share stock that is seeing some turbulence, okay? On 5 years, it was up almost 600%, and I find Align to be an absolute buy here at the 190 to 200 range. I think is a fantastic place to start. As a matter of fact, I think it is so fantastic that I actually bought 5 shares today at $192. So the company has about a $15 billion market cap. And like I said, guys, their last earnings report was disappointing, but this stock has an incredible amount of value, and this is still a very large growing company. So here in a minute, guys, I'm going to get to what Align Technology does and why I think it is such a fantastic investment. First off, let's talk about why the stock tanked so hard. So their Q2 earnings were actually up 39%, but the soft guidance is what pressured the shares down 22% after hours. We can go through this step by step. I'm just going to kind of briefly review. His revenues were up 22.5%. The clear aligner was up 14.6%. Scanner and services was up 82.5%. Their net income was up. EPS was up. Cash flows were up. And case shipments were up. What really killed Align last week, guys, was the guidance, okay? And going back roughly a year ago, Align is now on sale roughly 50%. Now, if you're not familiar with Align Technology, guys, they have what's called the Invisalign system, okay, that have been designed to take the place of braces. Okay? And that is where this company's growth is really coming from. Even here, guys, if you look at this picture, I'm sure some of you have had braces before in your life. Some people might be self-conscious about wearing braces, and they're also very expensive. Where the product they make here at Align, guys, it is clear. You know, you couldn't even tell somebody is wearing one. Even with this company, guys, it is a lot less expensive than braces. So you can see how in the future, and as this company continues to grow, I think it's a fantastic investment, down roughly 50% from its all-time highs. So I don't know if you guys can tell or not yet, but this month's video is all about strong recovery plays, okay? So stock number 2 for the month of August, guys, is Under Armour. And it actually lists under ticker symbol UAA. and ticker symbol UA, okay? But for all intents and purposes, I have ticker symbol UAA pulled up, and over the past 5 years, we all know Under Armour as a brand, okay? I'm sure just about everybody watching this video probably has some clothing in their house or something, whether it's shoes or jerseys or shorts or socks or something that Under Armour makes. Now, what really has came as a surprise is while most big retailers have grown fantastically over the past 5 years, Under Armour has actually seen some pretty big declines. If you want to go back to 2015, Under Armour was trading well over $50 a share, and the next 2.5 years were an absolute nightmare, getting down as low as $12 a share in 2017 before it started to see a reversal. Guys, I think this trend continues. So if you would have picked up shares of Under Armour in November 2017, you'd be well over a 100% return right now, and I would think you would want to add more here at the $27 level. And unfortunately, as I'm filming this video, I just realized something. Under Armour has earnings tomorrow morning, okay? So there's really no possible way that you could buy calls or even buy into this stock before they report earnings. I guess you could try to buy in pre-market before the report hits, but that's very, very tricky, and I do not suggest doing that. Now, the consensus EPS forecast for this quarter is a -5 cents. The reported EPS for the same quarter last year was -8 cents. So they're working their way out of that negative territory. Guys, I think Under Armour is going back to $50 in a few years, and I think this stock will continue to trade up much higher than that. Back on the 24th of July, Pivotal Research gave Under Armour a boost when they lifted its price target to $25 ahead of this week's earnings report, okay? So now when you see the $25, that's probably referring to ticker symbol UA, and UA is trading at about $24.32. So sorry for the confusion, guys, but just keep that in mind. It does have two ticker symbols, and you can trade either one. It really does not matter. The Pivotal analyst team expects Under Armour to raise full-year guidance, but sees the same share price running ahead of the lift, okay? Pivotal's PT is ahead of the average sell-side price target of $23.44. So when we all wake up tomorrow, you can click on the earnings report and see what kind of numbers they put out. But I'm expecting ticker symbol UAA to be trading back to $30 a share very, very soon. If you can buy shares under $30, I would highly recommend it. All right, guys, this is for all you high-risk players, people that like to have a pretty good amount of risk in their portfolio. Stock number 3 is PaySign, ticker symbol PAYS. So in 1 year's time, guys, PaySign has been up almost 538%, and it recently took a big dip. Now, this is a very, very small company. It's not even a $1 billion market cap. It is a $673 million company that has been growing like crazy. And so I really want to take advantage of this recent dip. As a matter of fact, I bought some shares in my Webull account. And as you can see, of course, PaySign did trade itself under $13 a few times and now is holding itself well over $14 in a recovery effort, okay? So the dip in PaySign stock price, guys, was not earnings related. As a matter of fact, their last earnings report in May was rock solid and they had great forward guidance. But BTIG, they cut PaySign to a sell rating on stretched valuations. And their analyst, Mark Palmer, he cut this stock to sell from neutral rating with a price target of $12, okay? Saying it prematurely reflects the successful execution of the company's growth initiatives when the viability or sustainability of those efforts are yet to be demonstrated, okay? So this stock traded down just simply on one analyst opinion that this stock is a little bit ahead of itself. But the one thing I do like about this downgrade, guys, is that they're not saying it is a bad stock or the growth is not there. And PaySign is set to report earnings on August 8th. So let's look at this for two different scenarios. Let's say you buy a set of call options or you buy into the stock and it gets to the earnings report, the stock takes off and runs strong again. Well, good job. But if you do buy into this stock now, and let's say it dips again after earnings, I think do not go all in. Leave yourself several different places to invest in this stock because I do think the growth is going to continue, okay? And then coming back to the chart, guys, like I said, anywhere From the $12 to $15 range, you do have to keep in mind you're about a 30% discount from where it was trading at on the 19th of July, when this stock was well over $18 a share, and its 52-week high was $18.67. So I think take advantage of these dips. Just leave yourself some room to buy more in case they dip on earnings, okay? Anyways, that's all I got for the video, guys. Thank you so much for watching. Go down to the comment section and tell me some stocks that you're going to be buying for the month of August. I hope I put a pretty good list together for you. These are all turnaround and recovery plays with massive amounts of growth. Thank you as always for watching the video, and have a great day.